this was quite an interesting finding in a study that we published earlier this year, is that even among the winners, there was sort of a phenomenon of kind of losing while winning, if we can describe it as such, as there's a little bit of a paradox. Essentially, many merchants were simply overwhelmed by the sudden increase in demand that they experienced once things started picking up on the digital side. And therein lies a bit of a paradox, which is quite specific also to payments. As you grow, as you expand your geographic reach, you start getting increasing inefficiencies as your complexity increases. So, you know, if you've gone from a simple strategy of running an online store, accepting Visa, MasterCard, and all of a sudden your online store is seeing a lot more inbound traffic from various territories that previously you may not have targeted, your ability to address those consumers' needs to handle their payment requirements, you weren't prepared for it or weren't aware of differences across regions, then you know you're failing to capture the full upside of the potential that suddenly opened itself to your business. I think in many cases, and again, I'm leaning quite heavily on the study that we did, there's some interesting phenomena that make me believe that while we're unlikely to see all the gains stay there once things return to some kind of normal, it's also quite likely that we've accelerated the shift to digital. You know, many people are citing things like by 5 years or whatever time frame you want to choose as the fast forward button. The reality is that during this period, we've had a lot of consumers from demographics that were traditionally perhaps slightly averse to e-commerce, experiencing the convenience of grocery delivery or online ordering for the first time. And the period has been so protracted that they've essentially gotten used to the benefits and experienced the convenience for themselves. So specifically in our report, we were seeing that a lot of the boomer generation, sort of in that 65 plus range, which historically, you know, would not have been a core demographic for any kind of online ordering. They, on the other hand, are also, on average, the demographic with higher spending power and a lot more loyalty to brands that serve them well. So if we take this as a specific example, if they've spent the past 6 months ordering from a local grocery delivery service or getting their food brought in by one of the food aggregator platforms, it's quite unlikely that they're going to use it as heavily going forward. But I think it's also fair to say that these platforms have won a new customer with a lot more loyalty and a lot more spending power than some of the traditional younger customers that they would have historically targeted. There's a specific example that's worth highlighting here, which is one of our merchants, Farfetch, which acts as a platform for luxury boutiques around the world to handle logistics and also drive traffic to individual boutiques. Pre-COVID, they would have expected on average for a boutique to see around 35% of its total revenues derived from their platform. Now, once those boutiques had to shut their doors, that very, very quickly, in some cases, grew to 100% because it was the only outlet that they had for selling products. And even now, in a post-COVID scenario, Farfetch are expecting that 35% to be a number that's consigned to history, with a much greater proportion of overall orders on all boutiques across the platform coming through this online channel.
Fantastic. Before I ask the next question, I just want to remind the audience, we will have a bit of time for questions in a few minutes. So if you have any questions, please make sure you post them in the chat and we will get to them. Sebastian, I want to ask you about the sort of technological advances we're seeing in payments at the moment. Specifically, we're seeing a huge growth in things like subscription services. Can you tell us a bit about the driving forces behind the growth in payments and what's happening in the payment space at the moment?
Yeah, sure. So look, I mean, first and foremost, again, not to rehash the same topics we've been discussing already, obviously there's increased need. E-commerce necessitates some form of digital payments because in many regions, or actually most regions now, cash is not necessarily an accepted medium of exchange when you're transacting online. Starting with the very basics, it's obvious that if you have the majority of your customers coming through digital channels, then you're going to see an overall increase in money spent through digital payment methods. Now, some of the other trends that I think are interesting and notable, there's been a dramatic increase in contactless payments, just as people are looking to minimize the contact with other people during this pandemic. We have examples of, out here, I'm based in Dubai, covering the Middle East. We had some examples of governments banning cash for online ordering, effectively forcing people into digital payment methods. So the mix of, let's say, necessity, in some cases regulatory pressures, and then ultimately, let's face it, just convenience. Because if you signed up for the first time with an application and gone through the trouble of adding your credit card to that application such that the payment becomes seamless going forward, essentially you're each time removing something that previously would have been considered a barrier to that digital payment happening in the first place. So we've always been very confident that the rise of digital payments is a long-term secular growth story. It's central to why we build the products the way we do. But again, we've seen a huge acceleration over the past 6 months. And again, just to illustrate this point, if we compare May 2020 with May 2019, our overall transaction volumes on the platform increased by 250%. And speaking with many other payment service providers or others in the payments industry, these statistics are broadly in line with what they've seen as well. So if we consider the total pie, it's clearly sort of grown very, very quickly.
And when we talk about innovations like the subscription economy, where lots of business models are shifting from single regular payments to a subscription payment, do you think that's growing the size of e-commerce and the value of what's happening there? Or is it merely cannibalizing sort of existing sales?
No, I absolutely believe it's growing the overall pie for the very simple reason that in many cases, offering a product through a subscription model reduces the initial hurdle in several ways. So, digital goods platforms moving into a subscription world, that's been a trend that's been active for quite some time. I remember, around 10 years ago, Adobe with all their sort of Photoshop software and various other products, they moved from a sort of hosted ownership one-time payment model to a subscription model. Now, what allows you to break initially have been a very significant investment of thousands of dollars into much more manageable monthly payments that are then sort of spread out over a number of years. If you look at the number of businesses that have been successful with subscription models, in some cases you take, like I said, a large initial investment that may not be feasible for everyone, or may be off-putting, or may make the consumer feel like they're committing too much without having an opportunity to try whether there's actually enough value in that product, and you're spreading it out over a period of time. On the other hand, you're allowing people to sample more of your product, and here specifically I'm talking about companies in the beauty space or things like shaving distributors that send you a shaver and then razor blades on a regular basis. These are all things where you're combining convenience, but also kind of giving yourself a natural outlet to allow your customers to try products that otherwise they might not normally have considered purchasing. If I'm sending a box once a month with a variety of beauty products and it's up to me what I want to put in there, then I'm giving that consumer more exposure to more of my brand. And this again sort of just broadens the appeal from a brand perspective of using this model, because otherwise you end up with that consumer showing up once in a while on an irregular basis, buying the same thing over and over again. So you're removing hassle from their perspective, because I no longer have to pop down to the supermarket to get razor blades. And at the same time, you're kind of giving me a pretty nifty way of experiencing other products that usually you'd have to sort of wonder about, how do I cross-sell or upsell this person to get them to try it out.
Fantastic. Last question from me before I start pulling some from the audience. In Asia, we've seen a huge, obviously, boom in stored value wallets with Alipay and the likes, and we're starting to see acceptance rise in Europe as well. What do you think? What do you think the future looks like for these stored value wallets with regards to European payments?
So, just to be clear, I mean, these are more my personal views, having kind of spent a lot of time in Asia and dealt with a lot of these wallets directly. I think what's noticeable in a lot of these cases is that where wallets have been successful, very often it was because they had a first mover advantage. So if we take, for example, Alipay, or if we take WeChat Pay, you know, these were operating in a market where the domestic card simply wasn't geared towards some form of e-commerce interaction. Similarly, if we look at, you know, M-Pesa in Kenya is often cited as an example of a successful wallet. You know, this was a product that was designed to work for an unbanked or largely unbanked population, and the only means of sort of transferring money back and forth easily was through a wallet hosted on a mobile phone. Now, what I've yet to see successfully anywhere is a wallet that outcompetes the traditional cards in a market where the card was already dominant. So while we are definitely seeing a lot of actors, especially in APAC, in Latin America, out here in the Middle East, and to some extent in Europe as well, launching wallets as part of a sort of super app, a combination of, you know, can I get my ride hailing and my delivery of groceries and my laundry and everything that I kind of consume through these various applications centralized in one central app and layer payments on top of that. But more often than not, you know, the rails that actually sit behind these apps tend to still be controlled by Visa or MasterCard, simply because the chicken and egg problem of providing a new payment method, having it widely accepted by the merchant base and convincing consumers to use that, it's very, 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 very difficult to crack that when you're coming up against entrenched competition that is as well established and as prevalent as you know, the traditional card is in most of these economies. So if anything, I'd say that where they've been successful, you know, they're in that position where it's very, very difficult to shift consumer behavior off something like Alipay and onto a traditional card. But Alipay, by that same token, is having similar issues, or other wallets are having similar issues when they try to go head-to-head in markets where, you know, they're not the first mover.
So maybe not in Europe just yet. We've had a few questions. Let me just grab this. There's one from Carlos and there's one from Erwin, and they're both on the same subject, which is what would be the impact of digital currencies in what you're seeing? And Erwin asks about blockchain technology and cryptocurrencies in your payment platform. So I think both of those, they're looking at the cryptos plus payments model. What are you seeing in that space at the moment?
Well, at checkout.com, I mean, we've become a member of the Libra Association. It's a technology that we find extremely interesting. Again, it's hardly surprising to anybody that's worked in the industry that there are many things when it comes to moving money from place to place that are still very inefficient, especially if you're looking at things like bank transfers, international bank transfers especially, and also to some extent payment processing in the digital space. Now, from our perspective, one of the things that's always been extremely important to us is that any shifts towards cryptocurrencies or the like be done in an environment that is appropriately regulated. I think all merchants and consumers, before things like this can become de facto normal, would expect a minimum of regulation to ensure that they cannot be scammed or victims of fraud. So the same way that there are protections in place on, you know, Visa MasterCard transactions, I think there have just been a few too many examples of various cryptocurrencies struggling with that same peace of mind. That being said, you know, there is a lot of movement from various regulators around the world to try and provide a framework that allows these cryptocurrencies to be used as a medium of exchange and enter sort of more widespread usage. Our hope is that these innovations drive faster payments, cheaper transaction costs, and to the extent that it's possible, actually a safer ecosystem for people to transact in.
Mm-hmm. We'll have to wait and see. Another question: we touched on subscription economy earlier. We've also seen a huge rise in the world of pay later, and I know Checkout has a partnership with Klarna, which is enabled on your platform as well. When you look at the world of pay later, how much of e-commerce can or will do you think this account for in the future?
It'll take a slightly braver man than me to make a firm statement about the future. I think what's fair to say is that we've definitely seen pretty explosive growth, especially in physical goods retail for these buy now, pay later products. As you mentioned, we do have a partnership with Klarna, and we do work with a few of the other providers in various territories. And when speaking with them, the story is always the same. I believe we have a generation that was scarred to some extent by the financial crisis earlier, last decade, and has an aversion to debt that doesn't really rhyme well with how credit cards operate. So when they're given checkout options that provide an alternative to credit cards, but allow them to break down payments over a period of weeks or months in a way that is, from a user experience perspective, usually much less invasive and less aggressive, let's say, than your typical application process for a credit card, that has a lot of appeal for them. From the merchant perspective, again, speaking to retailers, the universal feedback is that adding these payment methods does wonders for their conversion at checkout. It allows them to grow the total pie. So this is not just cannibalization of existing sales that would have come through a debit card or a credit card. They actively see new customers ordering from them. So, how big will it be? Like I said, it'll take somebody braver than me to pin a number on that. But for sure, there are certain advantages that banks have probably overlooked when dealing with younger customers, especially ones that are sort of affected by what they've grown up in over the last 15 years or so.
Fantastic. Seb, I think we're pretty much out of time. I know we overran a little bit and we had a bit of a slow start, but thank you, Seb, and thank you everyone in the audience for bearing with us and for your questions. And just to say, I think checkout.com have a booth, I believe, at the next web over the next 2 days.
We do have a booth, absolutely. So if you want to get any more questions answered or speak to some of our other representatives, please pop by. Be happy to help.
Fantastic. Seb, thanks very much. And thank you for everyone tuning in.
Thank you, Oliver.